Welcome to the Closing Beat, a live show where we cover the stock market, financial tips to get your dough straight, and sometimes Disney World. Wait, seriously? Disney World? All right then. The Closing Beat, presented by Jazz Wealth.
Yes, that's probably good right there. How we doing today? Happy Tuesday. Welcome. Hey, let's try it. Nope, doesn't work. Welcome to the Closing Beat, everybody. Try it now? The comments? Nope, doesn't work. Sorry. Welcome to the Closing Beat. We are financial advisors that thankfully are much better at numbers than we are with this video graphic stuff that you see here. Hello, Brent. How we doing there? WV Taco Marcus G's in the house. Good times, man. Pandemonium Doc, how we doing today? Welcome. Hey, by the way, I don't know who sent this, actually. And by the way, super thank you for sending it. But somebody had sent, I'm assuming for the Jazz After Dark, they had sent some Buffalo Trace, and it looks like it came from the Cask Cartel, which is out of Miami, I believe. But there was no note. And so whoever sent that, I wanted to say thank you for that. But if you did, please let me know. So and don't all you start saying that was me. But thank you for sending that. And if you want to know if that was you, it came with a very unique small sample bottle of whiskey that I personally did not try because I knew I wouldn't like it. But if you know what I'm talking about, then you'll know that that is you. So thank you for that, by the way. Hey, also, there may be an abbreviated type show tomorrow. You could tell the stock market has entered its calm, quiet time of the season here. We've got a lot to share with you today, but, you know, we may just kind of ease up on it tomorrow and do something a little more lesson-oriented, or if there's a big move, of course, we'll cover that. Also, the government shutdown bill. I love this. I've been telling clients this for months. Hey, your RMDs, the way your Roth works, the way your 401k at work works, that's all going to change in 2023. I got a feeling. And we're starting to see the beginnings of that there. RMDs are changing in the new spending bill. I knew it. Also, maybe some emergency fund help there. I like this idea, by the way. Some help out of your 401k without getting a penalty there. And, you know, your Roth 401k, currently you have to take RMDs. That may be changing as well. I love that stuff. And maybe my favorite one of all of them is we're working on the idea of rolling over old 529 money into an IRA. How about that? So maybe that gets passed, and that'll be some good stuff there as well. I love it. We'll cover it, of course, as more of this becomes official along the way there. But let's talk about the stock markets here. The futures market overnight was holding up pretty good. It was basically flat, slight positive gain. And then if I could just pop on over here, middle of the night, about 10 o'clock, bam, right there. Middle of the night, actually right at 10 o'clock. We just fall apart there. Crazy decline there in the stock market. That was because Japan, and today's lesson is going to be how other countries do things differently, and specifically how. So I'll ask for your help if you happen to be in one of those countries and know. In Japan, they've said that the overall volatility, or the range of their version of the 10-year, is allowed to move this much, meaning they will act like our Fed did, and they will buy and sell and do as much as they have to do to keep the range within 0.25%. They basically said, we're going to expand that to 0.5%. That's a fancy way of them saying, we are going to loosen the restrictions a little bit. We're going to loosen policy. We're going to increase volatility. And that wasn't the surprise. The surprise was this wasn't supposed to happen until April. So they started a little earlier on that. Their version of Jerome Powell, the Bank of Japan's president, he was supposed to retire, in March or April or something. And so he just decided to do that a little bit early. That caught everything off guard there. And reading in on this here, that was the reason why we fell apart. The surprise was it came a lot earlier than expected. They also decided they're going to do 600 billion yen buying of their currency, and they also are going to do the same thing the Fed did here, but with their 1 through 5 year treasuries over there. And so you saw the dollar, let's go right here. You saw the dollar fall apart in the middle of the night because the yen got so strong. I mean, instantaneously, the yen just, boop, we're up. So that's where that news came from there. As far as the S&P goes here today, something interesting. Did you notice, and I don't have it on this chart, I do apologize, but we were at the 200-day, the red line, and normally the blue line is my 50-day. The stock market fell in 5 days from the 200-day to the 50-day. And we thought, well, that's kind of interesting that's happened. It's not really a notable event. It's not something that happens a lot, but when it does happen, does that present a sign of weakness? Usually. And if so, how much? So let's take a look. Oh, fancy. So whenever the stock market falls, the S&P in particular, from the 200-day to the 50-day so rapidly, the forward performance tends to be negative. We were basically flat today. A week later tends to be negative. A month later tends to be negative. An attempt at a rally over a 3-month time period. And then the rest of the 6 months and the year tends to be negative. It tends to be a slight indication of more weakness. And maybe some of you could have guessed that because that's what we've been experiencing and are predicted to experience at the beginning part of next year. So I just wanted to point that out because it's fun, and also it's a data point that we don't normally see. That's not something that's happened a lot. There's maybe 80 instances in the whole entire lifespan of the S&P going back to 1934. So I thought I would share that with you. A couple other things here. Little oddball type indicators. Normally this time of year, there's not much to focus on. The Fed's done. Most economic news is out. We had building permits and housing starts and stuff today. So building permits, huge miss. But we start looking outside the box and just trying to gauge like general health of the market while things are quiet. If we look at something called the Equity Market Uncertainty Index. Now, first of all, notice that this starts at 2020. See how it's 2021 there? So we're cramming a whole year basically right in here. Remains elevated and increasing. So in other words, people that are uncertain about the future of the stock market, that's obviously increasing. It's above average in like the 80th percentile there, even accounting for the little blips along the way for the financial crisis, for excuse me, for COVID, and everything else that's happened along the way. Then we also have the same concept, but focused on the economy. Remember, the stock market and the economy are two different things on paper, right? They certainly can be correlated, but they're two different things. Economic Policy Uncertainty Index also remains in the upper 80th percentile, so meaning almost as high as it's ever been and trending in the wrong direction, which is higher there. So that going into a new year tends to be rather bearish, at least at the start of the year. So something to consider there if you're going to go get all excited and say, I'm going to buy on the first day of the year. There's always a chance, but just want to give you that heads up. If we look at the Dow there, basically what's happened with the Dow over the last couple of days, the stocks that led the Dow higher have been leading the Dow lower. If you look at United Healthcare, you can see the pullback there, one of the bigger, higher priced names in the Dow. That's doing the trick. The weakness trick anyways. Home Depot, after having a nice little pop to highs, that's also pulled back. And Goldman Sachs. So we're covering a bunch of different areas of the market, but only over 3 stocks. And you can see the weakness there being the higher price stocks. Remember, the Dow is price weighted. You have a reason for a little extra weight in the Dow. Nonetheless, it's still the best performing index on the year. It's right around down 10% for the year. So not hurting anybody. A couple other things. Let's dig through here. Silver getting a big pop here today. People like to buy their gold and silver, commodities in general, leading up to the potential for a recession. So if you notice, more people believe there's going to be a recession. They like to lean towards gold and silver. Historically, I almost put this together for you. Maybe we'll do it tomorrow. But historically, if you buy gold in particular, right before a recession, you're late. You do tend to see a little bit of a pop. Gold does rise through a recession or bottoms through a recession. So in other words, you have some positive performance there. But you're late to the party for the full gains. You need some kind of outlier event to really happen there. So that trade is starting to take place where people are moving towards that. You might have noticed gold today, another strong move and getting stronger by the day. Obviously, that's recession fears and all that good stuff. So that was some of your leaders here today. I also want to point out oil continuing to try to make yet another bottom there. Looking around, you're going to see weakness in the dollar that we already talked about. Transport's a little weaker on the day and will likely be weaker tomorrow. FedEx actually says, now this is, FedEx's CEO. I was trying to think of his name, can't think of his name. The CEO of FedEx says that there is going to be a worldwide recession next year. So much so that they're already planning for this. And they have, because their business is slowing down. But they're parking planes, they're closing down buildings, 5 of them, I believe. And he literally said, his quote is, there's going to be a global, worldwide recession in 2023. And you don't want a company responsible for moving packages, which is basically what the U.S. has become, us just buying and selling and shipping packages all day long. If that's a big part of our economy, bigger than anything physical, then, well, we don't want to hear that. That's not so nice, right? That's the simpleton way to say it there. So likely see some more weakness out of that one there. Home builders, they've been holding up, still holding up there. I'm not arguing that one. And you have a recipe for the moment for some of the larger home builders to start to find weakness. So there may be some chinks in the armor, as they say. Or is it kinks in the armor? I forget the old saying there. Canadian home prices. Now, just looking around, just seeing how things are going around the world, Canadian home prices, fastest 6-month decline ever in history up there. Does that matter? Why do we care? Does that affect anything here? Well, it does. So one of the things that's different, who can tell me how the Canadian housing market works? Is it like the U.S.? Does anybody know the answer to that? They are much more prone to fluctuations in interest rates. They don't get the same benefits up there that we do, where we just go, I would like a 30-year mortgage, and I would like to get it for 5%, and then it'll just always be 5% for 30 years. Nope, it doesn't quite work like that. Someone from around here has bought property in Canada. I'll let you explain to everybody how it works. So that's going to start bleeding over into the home builders, the larger home builders, and those that are more global. Not just the home builders, those that supply and everything as well. So there's something to keep in mind. Okay, where was I? Stocks in the news. Let's start with Disney. Can we do Disney real quick? All right, Disney tags a new low, officially erases all of its COVID rally and all of its any bounce this year. Big drop for Disney here. It's down over 40%. Is that a lot? Even I asked that question. I was like, is that a lot for Disney? I'm not sure. So I went to our research site. I'll just pop on over here, let you guys take a look as well. And I'm going to try to, I should have put this in here better. Here you go. I said, well, how often does Disney lose more than 40% in a year? And there were only 2 instances that came up. So I said, well, let's expand. How often does Disney lose more than 20% in a year? And let's look back over 50 years. There are 2 instances, 73 and 74, where it lost 60% and 54%. Other than that, the worst declines in history are 2001, 2002, and 2008. In other words, Disney falling 40% in a year is a significant discount. And I'm not being biased here because I like the theme parks. That is interesting. Is it not interesting? One extra thing I'd like to add to it. Let's go on over here. Pullbacks off of highs. This is just a fun way to look at how far a stock has fallen since it hit its last high. So 0 marks any time Disney was at a new high. And then obviously the pullbacks are how far it's fallen. We're 57% off of the last high. Is that a lot? Yeah, that's a lot. You got the end of 2009 over here, the dot-com bust, and all the way back here into the 70s. It is not normal for Disney to be discounted so much. Ask yourself, what happened to Disney in the years going forward when it had these pullbacks? Did it sit quietly and not bounce at all, or did it bounce? It's right there. I give you the answer. Right? So a severe discount here for Disney. And I do want to point out real quick that a lot of this has to do with the amount of money that they're spending to grow Disney Plus. Well, now the new CEO is there and he's like, tell you what, we're going to make this thing be more profitable faster. So that whole projection of profitability, that starts to play into the equation. People want some of that meat, right? They want to enjoy that. So I just wanted to point that out. I'm not being biased or anything about Disney, just the fact that that is statistically odd that would fall that much. General Mills getting a little bit of a pullback here after being one of the strongest stocks in the market. All in all, a decent earnings report. It did miss here and there. Pet foods was the big miss. Remember, General Mills is not just cereals. They lost more there than it was expected, and costs in general, even though they raised their prices, wasn't enough to keep their margins tight, and that's been what's been really hurting stocks around earnings season here, and continues to. Tesla, I don't know. Tesla's been in the news. It's like in the news every day. Issues about future demand is where all the analysts are starting to focus, saying, the demand's not there. We can't justify this price if the demand is starting to slow. And we'll see what happens. Speaking of demand, Netflix says, hey, actually, it wasn't Netflix. It was like Reuters or somebody, the Wall Street Journal maybe. They said, well, when we look at all the plans that Netflix has, and we look back over since the start of the ad-supported plan, that's been the least popular selection, meaning people don't want an ad-supported plan. So I kind of think that's good news, but nonetheless, actually the stock was kind of flat on the day. That's what happened. Steel Dynamics, congratulations. They'll be joining the S&P 500. I did not catch who they are kicking out. Did anybody catch that? I forget who it was. Anyway, Steel Dynamics will be joining the S&P 500. That will take place in just a couple days. God, I can't think of who it was. We just said it the other day. Anyways, welcome to them. And other than that, tomorrow, not much in the way of earnings. It's like maybe some news from Carnival, Micron, Rite Aid. That's pretty much it. A little bit quiet there. Hey, on our Jazz After Dark tonight, which maybe we'll have some Buffalo Trace. I don't know. Jazz After Dark tonight, we're going to talk about you're saving for retirement, but let's get some smart tax breaks while we're at it. Let's just not be the people that are like, I'm going to put money in a 401k and see what happens. Let's go a step further. So remember, if you're watching that show with us, the whole concept is let's go a step further. So we got your general advice. Yay, financial advisor giving good advice. Okay, good. Let's go one step further and say, okay, what do we do? Fortune Brands, thank you. So what do we do going forward? How's that next layer going to help us be a little more efficient? So we're going to talk about that here tonight, and I hope you'll join me for that. In 2023, by the way, what's your New Year's resolution? You have a New Year's resolution over there? You hate that, don't you? Oh, you have New Year's resolutions? Cody's got some New Year's resolutions. You going to share one of them? Give me a good one. Oh, Cody's going to smile more. Okay. So that's okay. He starts with a smile. He's even trying it out. Okay, that's a good one. Yeah. My 2023 New Year's resolution is selfish. Right? So all these years we've shared videos with you, hopefully taught you a lot. This will be the first year that I just ask you actually check us out. Maybe we're a worthwhile fit for you. You're welcome to schedule a call on a website. And we don't have like sales pitches or anything. So if you talk for a little bit and we find out you're better off doing something else, we'll just tell you. As many people can attest, if you've called and spoken with us, we just chat. Right? If we can help you, of course we want to help you. But if not, we'll send you on your way. And I hope you'll at least check us out and see if maybe we are a good fit for you. And if not, just happy that you're watching. You know what I mean? Just happy that you're watching. All right, let's see if there's any questions in here that I can help you with. And all seems to be working better here today. I like that. That's good. Let's see what we can do. Hey, Biomed. Thank you, thank you. Don't tell your wife how to drive. I was just talking to a friend of mine that is having date night tonight, and he's like, "Now I just gotta be nice, man. I just gotta be nice. I can't say anything that'll ruin date night." And I was like, "Dude, put some gum in your mouth and just use that so your jaw is flapping on the gum and you won't say anything mean," because he has a habit of saying these things. Anyone ever take the wine stocks through a recession? High-end wine stocks looking for good on a pullback there. That's an interesting one. I was actually, before the show, I was actually doing a little bit of a deep dive on Constellation Brands because I found it fascinating that Modelo outpaces Corona now and is projected to be like 55% of their revenue by 2027. Modelo. Now, I'm not a beer guy. You never catch me drinking a beer. I just don't really like it. But Modelo? Does that sound like, is Modelo popular in the beer world, you know? More than Corona? Maybe it's weird, right? Maybe that's a regional thing because we're in Florida. We think like, oh, like festive beer with the lime or lemon or whatever you put in it. But so I started reading down that and I got off track. So yeah. Yeah, your old man's working for a company that's now part of the S&P, huh? Yeah. There you go. What happens when Weber gets acquired to my stock? First time going through this. Yeah, so they're getting bought out there. And I believe it was a cash payment, if I'm correct there. I have to look at that. I believe it was a cash payment. And if that is the case, wasn't it 805 or something? Basically what happens is you just get paid out. So since it's getting taken over by private equity and not merging with somebody else, they are paying you for your shares. You'll basically just wake up one day and you won't have Weber shares, but you'll have $8.05 for every share that you owned. And the cash will be free for you to use. Yeah. Yeah. I saw the Aerojet purchase there with L3. I don't have any data on that. I didn't find it interesting enough at the moment, considering all the other stuff that was out there. But one of those things I'll catch up on the weekend and be like, oh, put that in there. You like your Disney J block? There you go. Now you know. You're buying the third largest pullback, or the third worst year it's ever had. So, not bad. There you go, 805, Emilio. So you'll just get paid out $8.05 per share. Yeah, that's awesome. What else? That's all. That's all I got. We did it. So we'll likely see you tomorrow. And like I said, maybe a lesson type day or something. We like to do that when things get slow. But enjoy the rest of your day or evening. And thank you so much for watching. Adios.